You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Please welcome to the OIC stage Jill Malandrino and her fellow panelists.
You? Good morning. Thank you, everyone, for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and also the host of Nasdaq Trade Talks that you guys all saw as you came into the conference this week. And it's been really interesting hosting a number of these conversations that we've had and listening in on the panels, because as my panelists will agree, we're seeing a lot of the positive themes for 2018 relative to 2017. And of course, with volatility and volume back into the market, that lends to the conversations around investor education, promoting market maker and liquidity issues that's prevalent in the industry, and ETFs really in the forefront of the options business, as well as other introduction of products. And that all comes back to innovation and technology, which leads the way for us to have these conversations. Without that, it doesn't allow market structure in our industry to evolve. So I'd love to introduce my panel. I have Pete Maragos, who's the co-founder and CEO of Dash Financial. Then we have Travis McGhee, he's the vice president of business development over at TradeStation, and Tony Zhang, he's the head of product strategy over Options Play. So we're going to take a look at the innovation in the options industry through the institutional, retail, advisor, and product lens. So I'd love to kick it off with you, Pete, and the evolution of trading technology from the product perspective has really been something to follow.
Absolutely. First off, I'd like to thank the OIC and Nasdaq for throwing this fantastic event. I know that I've certainly had a great time, and it's been good to get together. Yeah, no, I mean, from my perspective, I guess what I'm going to bring to this panel is the perspective of the institutional, execution space, and how we're using technologies and new tools, to help the institutional investor, and that'll be the perspective.
All right, and Travis, we'll turn it over to you with the active retail trader.
Sure, absolutely, and thanks again, obviously, for making me a part of this, and good seeing Pete and Tony and you, Jill. Yeah, so my focus with TradeStation obviously is more on the retail side, self-directed investing. What I'm looking at really is the evolution of the past 10 years, what got us to where we are now, particularly as it pertains to the retail client and how they're accessing the options market. Obviously one of the big trends now is mobile technology, and that's where we put a lot of time and effort, is not so much being a place for the customer to come, but going to where the customer is and allowing them to access options wherever they may be. And then also looking out into the next 5 or 10 years and how that technology is changing and what we need to do to stay in front of that innovative curve.
All right. And Tony, from the retail and advisor perspective, you're making options accessible to everyone through Options Play.
Yeah, thanks everyone for being here. Thanks to the OCC and Nasdaq. My name is Tony Zhang. I am the chief strategist at Options Play, and our mission here is very simple: to make options as accessible as possible to as many people as possible. So I'll be providing some perspective from the retail and financial advisors' perspective of trading technology here today. Our firm builds options analytics tools for the sell-side firms that service retail, self-directed clients and financial advisors.
I think what's interesting with our panel, when you look at innovative technologies, it lends to more transparent and efficient markets. And that's what all of us and what you guys do is responsible for moving the options industry ahead. So let's talk about that transparency and more efficient markets and how you're doing that over at Dash.
Absolutely. I mean, at Dash, I think that, we, early on in our history, we came out and, kind of took the perspective that show the customer everything, as far as what's going on with the order, when they sent it, what was the market data before and after, all the different child slices, and really showing people the market structure itself and how it's evolving through the life cycle of the order. And we kind of, originally when we did it just to be, different, and obviously, show people exactly what's going on, because we thought there was a deficit of that happening in the marketplace. But what happened as a byproduct of that is a really wonderful thing, is that once we saw that we were showing people what was going on and what we were doing, it created this feedback loop. Okay, where people said, wow, that's how you're treating my order. In these stocks, at this time of day, I want it handled this way. And in this portfolio, I want things done a little differently. And by being transparent, it's created a great feedback loop to create a consultative approach, where then we can then tailor the solution for the customer's benefit, where they A, understand it, and then B, we've altered it to suit them, so they really feel like they've had input and that product is their own. So, transparency really, I think it just unleashes, a lot of benefits to the end user.
And Travis, how do you translate that into the active trader?
Yeah, absolutely. And I think Pete hits on a great point there. And the key is understanding, right? Because if you understand something, by and large, you're going to be more confident. And with the retail investor, its confidence is everything, giving them the confidence they need to incorporate options into their portfolio. Even on the active trader side, with a lot of our active traders, by and large, we see a lot of folks who are primarily, into that pure equity market, whether long or short, but they really haven't incorporated options yet. So getting them to understand, a lot of that hinges on, obviously, education. As you know, we work together closely in putting together an educational package for everyone as they come in to understand the power of options, so understanding the product, but also understanding our product, understanding all the tools that we at TradeStation spend so much time developing, what that provides you, what type of color and clarity that is. It's a little different than the institutional client in many cases where, the retail, they're looking at the world a little differently, and they don't necessarily understand all of the analytics, what they're supposed to do, what it means to their portfolio. So we have to get out in front of that. So while having the tools is nice and the innovative technology, you have to back that up with support and understanding to get people actively using that product.
Tony, I love what you say when you explain options play. It's almost like taking a phone book for new retail options traders, and you have to find all your information here, but it's in Greek.
Right.
So elaborate on that.
Right. So when we look at the retail market and how they interact with the markets, it's really isolated to their trading platform and the tools that they use to research, unlike the tools that the institutional side may have with transparency. The retail customer doesn't necessarily always have that. And if you look at the user experience, when we look at trading platforms that the retail trader and financial advisors interact with, the innovations there really comes from user experience, making that user experience as efficient as possible. So if we look at equities, we see everything from the visualization and screening process to make research time down from a few hours or minutes down to just a few seconds, and then couple that with a workflow that allows a user to go from idea to trade execution with as few steps as possible on as many devices as possible. And this is all focused around user experience, making that as easy and efficient as possible. But on the options side, it's a little more complex because there's a huge educational hurdle that needs to be overcome before someone can start taking a look at options. So everyone here on this panel, and probably most people in this room, learned how to trade options using an option chain because that was the only thing we really had. But if you look at the user experience of that, it's actually quite cumbersome. It's kind of like handing someone a phone book and saying everything you need is in here. You just have to go and figure out how to navigate it. And by the way, it's also written in Greek. It's really a non-starter for a lot of beginners. So if we want to innovate in this space and we want more people to trade this market, we need to start looking at how can we change the user experience of options. And one of the things that we do is we ask a very simple question. We don't use a phone book today anymore because we simply go and search for the things that we need. So we simply ask, are you bullish or are you bearish on a stock? And we can present strategies that make sense for that outlook and present it to you in visual, clean design format, couple that with plain English to make it easier to understand, and this really helps facilitate the learning, the exploration, and ultimately the trading of options.
Well, innovation spurs innovation, but there also comes industry challenges with that as well. What are some of the challenges that you hear?
I mean, as always, I think that the liquidity is always a concern, across the landscape, and I think that I think there's a lot of great technology on the institutional side and the retail side addressing it. But I think just in general, people always worry, am I getting the best price? Have I achieved the optimal result? Did my order have the proper footprint, and impact on the marketplace? And I just think that, those are constant concerns. I mean, obviously there's market structure, issues and inefficiencies that we have. But at the same time, I would say we have the most robust, and most beneficial to the end user market structure, in the world by far. But as always, people want to do better. I think that performance has been challenged over the years, especially on the active management side, and really helping people get tools to interact with liquidity in a cost-effective manner. I think is always a headline concern.
Well, Travis, that was one of the common issues that we heard at OIC for 2018 was liquidity and cost of capital. How does that impact the active trader? Does it trickle down to them at all? Are these concerns that you hear at TradeStation?
Yeah, I mean, not as much. Liquidity obviously can be a concern. I mean, you look back on some of the events, particularly over the past 5 years. You think about February 5th, you think about August a few years back, and some of those moves where liquidity starts to dissipate, and that obviously creates some fears and tension among the retail investor. It creates more calls coming into the queue, and just overall questions, you generally have to address. I mean, one of the main obstacles and challenges that we have with the retail investor is, again, understanding the product, but understanding the actual tool that they are using. Most of the people that are coming to us, this is not their full-time job. It's not even their part-time job. A lot have had money with a financial advisor for 30 plus years, and they're just now dipping their toes into the space, and they might have heard about options from a friend at a dinner party or whatever, so they want to start to dabble in that arena. So coming in, I think Tony made a great statement, and making it as simple as are you bullish or bearish on the stock? We have to take that into account, and we're trying to adapt our platform to be designed in such an intuitive way that it's that simple for an individual to come in, and it gets them over the hurdle that much quicker. That's our primary challenge, is getting them to actually place a trade and shortening that time frame from opening an account and funding it to actually placing that first trade. And a lot of that comes with trying to simplify the technology so that when they see the market more clearly, they see the products more clearly, it's as simple as, okay, I understand what I'm doing. The platform makes sense. I'm going to execute the order.
How do you think investors reacted during the volatility event on February 5th? Do you think they had enough of the education behind them to handle it better than they might have with the lack of technology and education, say, 10 years ago?
Yeah, I think they handled it very well. I think the retail base, from what we saw at TradeStation, did extremely well considering the magnitude of the move. I mean, I know in many cases it was isolated to two particular products. Now, that being said, I think someone had mentioned in an earlier panel, there's a lot of emotion with retail investors, which is very true. And with the speed of news and how things flow through the markets now and how quickly we access it, XIV and SVXY, when that took place, that created a lot of fear across all retail investors, to where we encountered a number of questions. How does this impact the overall market? I was trading options on these products, or I'm trading options on similar products. What does that mean for me? So it's a learning experience. Again, to answer your question, I think the market handled it fairly well, all things considered.
All right, and Tony, let's move beyond 2018. When I had you on for Trade Talks, we were looking at machine learning in the cloud and so forth, and how we can integrate that into retail options trading platforms. What's your thoughts on that?
Machine learning is certainly an interesting topic that everyone is throwing around. We're seeing companies in all different industries pop up applying machine learning to it. And I think there's no doubt that machine learning will be an integral part of this industry going into the next 5 or 10 years. But I do think that before we kind of start speculating on what we're going to apply machine learning to and how we're going to apply it, we should really take a step back and better understand what types of machine learning algorithms are out there, because the decision makers that are currently trying to apply machine learning, I feel or at least there's some misconception as to what machine learning can do. You can't simply just throw a bunch of data at it and hope that it'll be able to provide you with insight and analytics to better run your business. It's important to understand that at this point, the types of machine learning algorithms that are available to the general public is classification machine learning algorithms, which are good at solving certain types of problems and not very good at solving different other types of problems. And that's really important to understand what types of problems it's not good at solving, because we don't want to spend all our time and capital to effectively spin our wheels, because that is what you can do with machine learning if you're not applying it correctly. So I think we need to take a step back, understand what types of problems we're trying to solve. I think some of the things that we've brought up at this conference regarding liquidity, regarding transparency, there are different parts of this types of problems that can be solved by machine learning. So we just have to take a step back, understand what the problem is before we start applying machine learning to everything.
All right. And Pete, I was going to ask that as well.
Yeah, I'll jump in on that one really quick. I mean, I think that the capabilities of machine learning, I think it's evolutionary, not revolutionary. I mean, just like everything, it's not going to be big bang and all of a sudden everybody's going to rip out all their technology and adopt new. I mean, but I think, at least for us at Dash and, in the institutional perspective that we had, it's about using machine learning to make our routers smarter. Things that we used to be kind of set statically or based on data sets that we would analyze and maybe set on a daily, weekly, or monthly level. Now we're doing those things more dynamically, intraday and so it's just about using a new technology to make things more dynamic and make the routers more smarter that can deliver, I would say, deterministic value to the end user. And I think that, being able to drink 20 years of data in real time and come up with some simple signals that help us make better decisions within our smart routers, can deliver real value every day.
All right, and I'll pass it off to you as well, Travis.
Yeah, no, I think a number of great points made here. Again, to Tony's point, finding what that problem is and then applying machine learning to a solution or as a solution for that problem. At TradeStation, we're putting a large number of investment dollars in time and effort and resources into artificial intelligence and machine learning. The problem for us, again, is simplifying investing for the retail investor. The speed at which they can come onto the platform and readily trade the markets. In a number of scenarios like that, it's a matter of, what do I trade and how do I trade it? And how do I adapt my portfolio over time as market dynamics start to change? So we're looking at machine learning and artificial intelligence and working on some things as far as portfolio optimization. Again, allowing someone to come in and as simple as saying, hey, I'm bullish or I'm bearish. Okay, how much money are you looking to invest? Okay, got it. What is your general goal? Taking some basic parameters, plugging that in, and then suggesting, what are sample portfolios that might fit those general parameters, and having that portfolio be dynamic over time and optimized based on changing dynamics in the market. And we feel like that's something, as you mentioned, the market's evolving, as new players are coming into the market, and we talked a little bit earlier on a panel about millennials coming into the market. This is something that could very much speak to that grouping.
And that's my next question as well. Mobile technology, how much does that play into the retail platforms right now? Because it seems as if the shift goes from, it's going to mobile right now, and you're seeing less and less desktop trading, which I find fascinating.
Absolutely. The majority, it's parabolic, is particularly at TradeStation. The number of our users that have migrated over to mobile is up considerably. I mean, in 1 year's time. I mean, we look back to, again, February 5th as an example, and the majority of the orders coming through and option-related orders are all coming through mobile. Now, most of us sitting in this room, and I can remember, you think back 10 years ago, I never, ever would have considered placing an order via, mobile technology. And now, majority of our traders, that's primarily how they trade the market, is through their phone. So with us, we're launching almost on a weekly basis now upgrades to our mobile technology, allowing people the same power and analytics that they would receive on a desktop, or at least getting them as close as humanly possible to having that, so that they can trade the markets when they're away.
Tony, I'm sure you agree. You were on the Millennial Mobile Trading panel last year for OIC 2017, so I'm sure you would agree.
Yes, absolutely. So the whole mobile push is also still under the user experience umbrella of delivering what people want in as simple as possible. And just to kind of tie things back a little bit regarding the retail space, two things that we really see as a challenge for the retail market. Number one is the efficiency and transparency of markets is not something that the retail trader has any visibility into. So, Peter, you talk about the order quality that your institutional customers get to see. The retail customers don't see any of that at all. And that was one of the biggest challenges we have. The problem that we talk about at this conference every year about liquidity on the screen, that's what the retail customer sees. They don't have any idea as far as where true liquidity is. And actually, they are the segment of the market that actually can benefit the most if they just simply had a bit more transparency. Things like theoretical value, things like where where orders actually are getting executed at. This is the type of problems that machine learning can help with and provide transparency to the retail market. And because we're hearing from retail markets that aren't even attempting to interact with the market because of the quote they see on the screen. They're just assuming that if something's trading at 40 cents by $1, I'm just not going to there's no liquidity, I'm not going to trade it. The other challenge that we really see in this market with respect to user experience is, we've come a long way with mobile, with all the innovations we've done in terms of making options more accessible. But once we get a customer into an option trade, once they've sold their first cover call, once they bought a call or a put, how do they manage that trade? That education and guidance and tools isn't really readily available for the retail market. It certainly exists on the institutional side, but we're seeing customers sell a couple of cover calls, but because they don't know how to manage it, they kind of step away from the market again. So that's really some of the things that we're applying machine learning to in terms of portfolio management, like you said, is taking a look at simple rules like when to take profit, when to cut your losses, when to roll your cover calls. That simply doesn't exist, and that's what we're spending our time and our resources on, is helping retail customers manage their positions. And if we look at the RIA space, they manage $4 trillion in AUM, and this is a market segment that doesn't really utilize options as much as they could. And all they need is a little bit of help from technology to help them get started with options trading and, more importantly, manage the positions that they're in.
Right, particularly that's where the growth in the industry is with options trading right now. The RIAs for sure.
Absolutely.
Yeah. All right. Do you think technology solves all these problems, though?
Technology on itself cannot solve all of them. I think there's absolutely critical that it has to be an education front that goes with it. And I think we're slowly starting to see the merging of education with the technology that's being put out there. Historically, options education was kind of siloed and it was very theoretical and academic. And then once you learned that and you had to jump to the tools, it wasn't an easy transition for people. And now we're slowly starting to merge that, where we're teaching using the technologies and the platforms that people actually trade with, and that really helps by leaps and bounds, in my opinion.
Pete, does this apply on the institutional side as well? Because when we say institutional, we just don't think of a trading desk, but the asset managers that also require education in the options industry as well.
Absolutely. I think it goes throughout the, everybody in the space. I think that, especially visualization, I think that it's really technology visualization makes things more consumable. If you can see it, you can understand it. And I think that, both Options Play and TradeStation do a great job of that as well. It's just people don't understand that the level, when I came into the business, I started on the trading floor, and there you could learn everything. People willing to teach you. That's not available anymore. Everybody's with their phone in Starbucks, et cetera. So using visualization technology to give people animations of what's happening, giving them choices, options. This is what generically you want to get short. Okay, here's 3 ways to do that. Here's different ways to express that. And I think on the institutional side, it's the same thing. People are obviously there's less people, there's more technology, and with those people, they need to manage multiple portfolios and express themselves in very different ways across different portfolios to achieve different outcomes versus the numerous benchmarks out there. So giving them more tools and giving them more sort of shortcuts using technology where they know they're doing the right thing and they're expressing themselves and they understand the profit and loss capabilities and all the different horizon-based risk parameters, I think makes everything more consumable, and that creates an environment where they can trade more.
Right.
You know what I mean? Which obviously benefits.
Well, it's almost necessary because if you haven't had that formal physical training on a trading floor or a trading desk, you almost need to have it done for you. So it'll be interesting to see where we are 20, 30, 40 years from now when people like us are no longer in the trading business. But we have a little bit of time left, so let's go and spend a couple of minutes each going down the line. In the next 5 to 10 years, where do you see the business in terms of innovation and technology? Because innovation does spur further innovation.
Sure. I'll jump in first. I think, going along the same thing, I think it's visualization, and it's really, algorithms and smart routers getting smarter using machine learning and AI, and I think we've covered that, at kind of almost ad nauseum in this panel at this point, but I think it's really unleashing these new technologies and helping people. I don't think that, I think a lot of people are concerned is it going to be too many machines and not enough people? There's always going to be room for talented people in this business, in the investment horizon. It's just about equipping that. It's almost like, I think it's like athletes, you know what I mean? Over time, you're going to get better tennis rackets, better shoes, better everything, and it's just, and using the, visualization, help people control and understand what's going on, improve their investment experience, and also give them the tools to perform better. And I think that, so that's what I think. I think it's just really, helping, all the professional users and the retail users really make the most out of their capabilities. And I think that it's going to be an exciting time in the next 5 or 10 years.
All right, and Travis?
Yeah, so obviously, again, the AI and machine learning space. But I think as it pertains to the retail investor, again, I noted on it when we first started, it's going to where the customer's at versus having them come to you. And my belief, and this may blow your mind, but my belief is that in the next 5 to 10 years, I think inside of the next 5 years, as far as technology is concerned, it's going to be voice and it's going to be chatbots. As education and the retail investor starts to understand options, starts to understand the basic foundation of what they need to access options and trade their portfolio, you're going to see firms start to launch applications via Alexa, via Facebook chatbots, via all these different avenues to where particularly the millennial is living right now, to where they're going to be able to access and trade without ever touching a platform.
Will replace me with Alexa.
So we're all
Let's
gone.
have Alexa
it's going to
asking
replace all of us. Yeah.
All right, and Tony, we'll wrap it up with you.
So I think that the industry needs a bit more automation, and I think we need to also step back a little bit from all the strategies that you can trade with options. Like Henry Schwartz on the first day put up that slide talking about what strategies actually trade, right? It's really sexy to talk about butterflies and condors and all of these complex strategies, but in reality, people trade cover calls, they buy calls and puts, they sell puts, they trade a couple of spreads. But that's the vast majority of the volume in options, and I think we need to come back and focus on those and do those strategies really, really well. And we can do it through automation because these are strategies that make sense for a long-term buy and hold equities investor to add to their portfolios, but they're scared of doing it today because they don't necessarily have the right education and tools. And I think this is really where machine learning and automation can really change the game in terms of being able to help every single equity investor to add options to their portfolio through some form of automation, doing simple things like cover calls and short puts alone.
All right. Well, thank you very much for everyone joining us today. If there are no questions in the audience, we can wrap it up a couple minutes early and get the next panel going.
Thank you.
All right. Thank you very much, everybody.
Great. Thanks, Jill. Appreciate it.
Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.